What's up guys, Q here from Hyperstocks. So today I'm just going to be creating a watch list. This is the watch list that I've already set my preliminary stocks to, but I will be creating these setups and I'm just gonna walk you through a few of them, just so you can kind of get an idea of what I'm looking at when I'm looking for my watch list and creating it, and also how I structure my watch list for all the members. So obviously we have members from all different types of incomes and financial abilities in the chat. So I try to focus my best on creating a watch list with a range of prices that really fills the need for all. So those members who are able to trade with thousands of dollars, they have these $50+ stocks, and then the members who are maybe not financially there yet, I still make stocks that are fairly cheap. I put them on the watch list, that way everybody can benefit. So with that being said, I'm going to move on to the setups in which I've already created. So I worked on these last night and through the day, and I am expecting a nice result from this specific watch list as we did last week and we did the day before. Now in terms of my screener, so I'm gonna go ahead and pull that up first, that way I can show you guys the exact screener that I look at when I look at my watch list and how I create these setups. I go to finviz.com. I've already got my screener set up, so all I have to do is navigate to one of these different screeners in which I constantly switch back and forth, but I'm going to show you my favorite one. It's a pretty simple scanner. A lot of people, sorry, my cat. A lot of people will kind of overcomplicate their trading. They will think that they need to input something for each one of these different inputs and filters. But in reality, you just need a few different things that will give you a successful outcome in your scanner, especially something as simple as this. And one thing to keep in mind is when I'm looking at my scanner, I try not to focus on the top 10 stocks unless I do see some kind of opportunity. But when stocks run this much, I already kind of give up my hope on them and expect a pullback anytime. So it's not really ideal for me to be trading stocks that have already ran up this much. But I'm going to start with the left and I'm going to move on to the right. So the first thing I look at is the 20-day simple moving average. So as you guys know, I mentioned the moving averages a lot on my trading, and you guys always ask me, why do you use the 20-day versus 18 like most people? And that's because it matches my scanner. So you got to remember, you have to be thorough and you have to be uniform with everything that you do. And the most uniform thing I can do is trade my charts in relation to my scanner. And if I'm looking at the 20-day moving average on my scanner, I need to see it on my charts too. So the reason why I choose for the price to be above the simple 20-day moving average is because typically stocks that trade under their moving average, the 10, 20, 50, or 100, will likely be bearish in terms of their near future moves. So this filters out for me any stock that's not above its 20-day moving average, and I want, for the day at least, this is in 1 day candles that the stock is over its simple moving average of 20. So I want those stocks that are just becoming bullish. They're not over the 10-day moving average, they're over the 20. So they're barely becoming bullish, and they're likely going to have a crossover to the upside soon between the 10 and the 20-day moving average. So that's one. And then I also changed the price. Now, depending on who I'm making or who I'm catering the watch list to, or what stocks I personally want to trade, I'll go ahead and fluctuate between these numbers. This is kind of subjective. This isn't as important to the success of the watch list. At the top, I changed the signals to the top gainers. So from all the stocks in the world on the stock market, the American stock market, I want the top gainers. Now you can move around with this. If you're into options, you can go to most volatile. If you need something with a lot more volume, you're going to go to more active, upgrades, downgrades, oversold, overbought. So you can kind of switch back and forth. And I do switch back and forth on my different watch lists. But for this specific one, I just go to top gainers. Country, USA. I love US stocks. I've always trusted them. I feel like there's gray area in stocks in other countries, so I stick to USA. And then finally, current volume, I want something over $500,000. I'm sorry, over 500,000. So with that being said, when I go ahead and put all these filters in, the FinViz will go ahead and filter out all these stocks accordingly to these filters. And you could see it gave me 3 pages. It won't necessarily always give you 3 pages. For example, If the market ended down and everything kind of went down with it, you're going to see a lot less than 3 pages because it didn't really qualify for a lot of these things that I'm looking for here. Also, one thing to keep in mind is not all these stocks are going to be good stocks per se. So some of them are not going to make it into the list just simply because maybe they were up on news or some kind of crazy announcement came out, but it wasn't really enough to keep moving the stock. So I'm not going to go into too much detail on how I found the stocks on this week's watch list out of this watch list, but I am going to show you the stocks in which I have already pulled up, and I'm going to go ahead and show you the setups that I've created for them on tradingview.com. So the stocks that I've pulled up from this watch list, and not all of these were from this watch list or from this scanner. Some of them were actually ones that I've been watching for a few weeks now, but I'm going to focus on VUZI, SNGX, Spike, and then we'll see if we do any more. So let's go ahead and navigate to VUZI, which I've already pulled up. So VUZI is they make smart glasses, and they're supposed to be, as of this month, 4G and 5G capable. The medical field is starting to pick them up. So overall, this company is moving in the right direction, and they're actually the #1 provider of smart glasses, and so which makes them a really high contender, even for future investment, possibly, depending on how their numbers look. Because we are moving in a direction in which I foresee myself, maybe not me using them, but I foresee smart glasses coming to life eventually with how convenient the world is becoming. So with that being said, so I have 30-minute candles pulled up on VUZI. One thing that I want to explain is these support lines and the resistance. So VUZI initially had broken out down here from the $1.80 mark. It gapped up the next day and it kept moving up. Finally moved up all the way to the top of this candle, but got pushed back right around the 280 to close all the way at its support of $10.10. Stocks have a tendency to always come back to test their support lines, and this one did. The very next day again, it had a massive breakout, getting rejected right around 280 again, coming back down below the support this time, but it had made another support on this breakout. So we can technically put another support right around this mark. And the reason why is because on this specific candle, the stock got rejected initially before loading up some pressure to break over this point and get rejected again. So you can automatically put a support there, and now the stock uses it as a support, bounces back, comes down off the 280 one more time, keeps bouncing back between these two supports. But the fact that the stock is staying above the initial support and not making lower lows makes it a bullish contender, because the stock keeps on moving down, but it has enough volume or bullish move for it to keep going back up and get rejected and come back down. So the more times it bounced down, now we're seeing a triple top forming, and the stock finally gained enough volume right around here. You could see the volume spike, and it pushed it above 280, broke to $3.10, got rejected, but now it's testing 280 again, making it a perfect entry for us to go in at $2.80, because now I'm expecting the stock to push back up and get rejected off the 310, just like how it's got rejected multiple times before, and it will kind of just fluctuate back and forth. It may even come down to the 260. I mean, don't be too surprised if that happens, but from the looks of it, the stock will likely get pulled back up to break above $3.10, and now we have to set a price target for it. So I'm going to go ahead and take these off, and I'm going to go ahead and pull out to the 5 years that I'm looking at, and I want to see what price target I could set for this stock. So obviously this is the highest point that it's been recently, the top of this candle. So on that day, which was Friday, the stock pushed all the way up to the high of this candle. The high of this candle is $3.30. I'm going to go ahead and kind of not go into candle explanations too much, because I'm going to leave that for another video, but just know that the high of this candle was the top of this wick. This line right here is called the wick, and that closed at $3.30. And then the stock got rejected. So our entry point is around $2.80 for this stock, because we want to catch it on a pullback. Let me just see one more time. Yeah, $2.80, because we want to catch it on the pullback. And then our price target initially should be $3.30. The reason why is because that was the highest point it reached most recently before getting rejected. So we'll make that our first price target, and that's the price target in which I expect the stock to struggle at as it moves up. And then our second price target is going to be right around $3.50. The reason why is because that was once a support and resistance for the stock, and it dipped below it. So that's the next price target in which I expect the stock to make a high to before getting pulled back. And then finally, we want to fill this gap right over here. So we make the next price target $4. So ultimately, the price target for this stock is going to be $4 for the short term. This company in general, and I usually don't say this about my penny stocks, but I'm seeing a lot of growth for the future for them. So they may actually move their way up to $5 and even more. So that's not investment advice or anything like that, but I really like what this company is doing in general. I think their business structure is really good, and I think they're in a niche industry in which sets them apart from their counterparts. Now I'm going to go ahead and go into explaining SNGX, and I may only do one more because I am kind of running short on time here. SNGX, so I'm on the day candles right over here for this company. One thing, first thing that I noticed is the stock on this specific day right over here, which was, I believe, Wednesday, the stock came down to test its 20-day moving average and bounced back up. Now, on that bounce up, we see a spike in volume compared to the rest of the days that were before. I tried to say a word, but that didn't work. That were before this stock broke out, and then finally volume was gaining on a daily basis as the stock was moving up. So even on its largest spike, the volume spiked the most. Now the stock is starting to go into overbought territory. So but it's not too in overbought territory. So you may see some fluctuations in this stock before it moves its way fully up. So let me go ahead and pull up the analysis that we made for the stock. And that was our entry of a $2 to $2.10 price target. So with that being said, why is that our entry? So I'm going to go ahead and show you the layout. So this stock in specific broke above its $2 resistance, and now it's made it its support, but it is becoming overbought, in which I've highlighted on the RSI for you. The stock made it to $2.20 but got pushed back, and now it's kind of fluctuating in between those two price points, and I expect it to do so until it cools off the RSI levels, because you got to remember, stocks are like a rubber band, and if you pull it too much, you're just going to break it. And you want to give it some leeway. It's more like fishing, actually. If you have a fish bite, you don't want to just pull at it and just pull at it. You want to give it leeway, let it come back. Give it leeway and let it come back. And then finally, I'm expecting the stock to break above 220 if it successfully does so. You got to remember, nothing is definitive in the stock market. So if this sector or this specific stock has some negative news against it, it may just wipe out the entire setup, and your stop loss will be hit and you'll be out of the trade. But I expect the stock to eventually test the 220 again, break above the 220, and make it all the way to $2.40 initially, because that would be the first gap to fill. And then finally, I expect the stock to move its way up all the way to $2.80, but that's going to be through a series of highs and lows. If the stock keeps moving up as it does right now in a straight arrow up, that's a very dangerous stock to be in, because the more you pull at that fish that's swimming away from you, the more likely you're going to break the line, and it's just going to pull right back down. Instead, you got to give it leeway to go up and down, up and down. Let me see if I can squeeze Spike real quick for you guys. So I'm going to go ahead and set up Spike. This is a good lesson. So Spike, I had set it up last night, and first thing I noticed about this one is its successful breakout from this channel down pattern. So really cool pattern to be broken out of, because it sets the stock up for a bullish future, maybe near future, not long future. Not too sure about this company's numbers for me to give you any solid feedback on their earnings or whatever it is, but I know that this stock has broken out of that channel down pattern. The channel down pattern started April 10th or so and then ended May 19th. It just kind of gives you an idea that there's really no limit to channel patterns or any kind of pattern in the stock market. It can be created over whatever series of time. We're looking at this stock in 30-minute candles. That means each candle represents 30 minutes. And then the stock had broken above that channel down pattern and broken above that $8 support, which is now the support. It was the resistance. The reason why is because this resistance is because when the stock fell below it here, it became its support, and then it got rejected off of it right over here, which made it a resistance. But when the stock broke back above it, now it's support. Stock made it to $9, which was its previous resistance, still the resistance, but closed back at $8.40 or right around that point. And now the stock will likely fluctuate between these two price points before ultimately testing 9 again, moving its way to 950 and even 1050 for the final price target. So with that being said, I hope this video was helpful to you guys. I really tried to make it short and sweet, and I tried not to make any, you know, unnecessary references or tangents so I don't want to waste your time. With that being said, if you're not already subscribed, go ahead and subscribe. If you're not in the chat, you can ask how to join the chat via our Instagram, or you can use the link in our Instagram bio to join the chat. And then finally, the Hyperstocks community, thanks for checking in with us. We love to always have you, and thanks for being a part of our community. Thank you.